What's up, everyone? So in today's video, I'm going to be talking about the don'ts when it comes to real estate investing. Now, real estate investing can be a very lucrative and rewarding journey. I know that it has been for me, but there are a lot of things that you need to avoid in order to be successful on your journey. Now, I hope this video helps you out. I'm going to go over 6 things that you should avoid when investing in real estate. So let's get into it. So real estate investing can be a very lucrative way to build wealth, but we want to be aware of some of the things that we should avoid when investing in real estate in order to help us succeed on our journey. So here are some things that I think can help you and improve your investment strategy. 1, don't overpay for a property. It's important that you pay what that property is worth, and even better if you pay less than what it's worth. And that means in the condition that it's currently in. So I do a lot of rehabs. Most of the properties that I buy are distressed. I have to make sure that I'm buying that property for the condition that it's worth now. That includes all of the expenses deducted off of what the actual value would be. If it was renovated, I need to calculate all of those expenses in order to make sure that I'm coming up with an accurate representation of what it will be valued at after I fix it. And if it's a nice property that doesn't have a lot of expenses with it, you still need to make sure that you are calculating your numbers correctly. Don't overpay for a property, especially in 2023. We were at the peak of our market recently, so the seller's expectations are high right now. We need to make sure that we're paying what the property is worth and not in an inflated market. 2, due diligence. It's important for you not to skip due diligence and make sure that you are calculating all the property expenses. You're making sure that all the title work is done correctly and there's not any liens that are on the property. You're making sure that all the zoning issues are correct with the property. Not doing the proper due diligence can cost you lots of money down the road. Negotiating and due diligence, very important aspects when investing in real estate. 3, finances. You need to make sure that you're calculating your finances properly. You need to make sure that you have a solid financial plan. You have enough reserves in place. If it's a long-term rental, you want to make sure you have at least 3 to 6 months of mortgage and expenses in case anything comes up. Remember, you're going to have vacancy with this property, so you need to make sure that you have enough money to cover that downtime in between tenants. So number 4 is your market. And this is super important right now. You need to pay attention to your market trends, especially in 2023. Now, I'm a seasoned real estate investor, and the deals that I see in the market right now are just bananas. So if you're investing in real estate to do a flip, you need to make sure that you know what your market is doing. You don't want to purchase a property, do all the renovations on it, and then it comes time to sell, and the market has dropped 20%. If you're going to be doing a flip right now, my advice would be to make sure you do your calculations as if it's going to be a long-term rental. So don't even calculate it as a flip. You want to make sure that you're negotiating a good price. You want to make sure that you have your renovation budget all lined out. And whenever you do your numbers and it looks like you're able to hold it as a long-term rental, when it comes time to sell, it won't really matter what's going on. You'll be able to weather that storm and make it through a down market, if that is to happen. Now, I'm in the Midwest, so we haven't dropped much yet, but I know in other bigger markets, there is a 20% decrease from the highs already. So make sure that you're doing your numbers correctly and paying attention to your market trends. So number 5, don't do everything yourself. Remember, you're not an expert at everything. You can hire a real estate agent because they're good at negotiating and they're good at selling properties and marketing properties. If you're going to do a long-term hold, you can hire property management. You want to be able to put some of these tasks on someone else. That way you can continue on your real estate journey. At the beginning of my real estate journey, I got bogged down a lot by having to do everything myself. I still do everything myself, but my tenant class and my properties are in good enough shape where I really don't have to deal with it more than maybe 5 to 10 hours a week. But it will slow you down. It will not allow you to focus on getting new deals and continuing your journey if you're trying to do everything yourself. When you're doing your calculations, calculate in property management. Even if you're going to do it yourself, make sure you calculate it in. That way, when you do decide to grow, you're able to allocate that expense. You've already done that in your calculations beforehand. And lastly, number 6, emotions. Don't let your emotions get in the way of your investing journey. Right now, it's especially important because in 2023, the market is kind of funny. I don't know if I want to just mitigate my risk and sit on cash or if I want to continue investing. I myself am worried about what is going on in the market. And if I let my emotions get in the way, I could possibly make some costly decisions. And you don't want to do that. You know, I've done flips in the past, or I've come across deals in the past. I just really, really love the property. I'm like, this looks like a really cool property. It's in a great area. I want to own this. Then I start penciling it in and it brings me back down to reality. So we want to make sure that we're not making decisions based on our emotions. We want to make sure that we are making decisions based on the numbers and the analysis of the property. So these are just a couple mistakes that I think you should definitely avoid whenever investing in real estate. I hope you like this video. I hope that it will help you continue on your real estate journey and continue on your journey to financial freedom. And if you liked the video, please click the notifications button and subscribe. As always, thanks for watching.